I would like to welcome you on behalf of the President and the Executive Committee of the chapter, a webinar conducted by CA Sri Lanka, chapter of Western Region KSA. For today's session, we have CA members joining us from Sri Lanka, UAE, Bahrain, Kuwait, Qatar, Riyadh, and Dammam KSA, and also from various other parts of the world. We also have members of other accounting bodies and colleagues from other professional bodies participating. I thank you all on behalf of the chapter for accepting our invitation and joining with us today. Participants, please feel free to post your questions relevant to today's topic in Q&A box. We will take all the questions at the end of the session. Our panelist today is Indika Bandara. Indika is a member of CS Sri Lanka and graduated from University of Sri Jawardenapura, specializing in accountancy. Indika is the president partner in VNI Chartered Accountants and also have functioned as a managing director in Analytics Sri Lanka. He started his career with Ernst & Young and has functioned as CFO in George Stewart Health. Indika has extensive experience in lecturing, accounting, and finance students. Indika, it's an honor to have you with us today. Over to you.
Good evening, all of you. I think you can hear me properly. Yes?
Yes, we can hear you.
It's very clear.
Okay. Thank you very much. Thank you very much for giving me this opportunity, CA Sri Lanka KSA chapter. As explained, today our session main objective is giving an understanding about tax liability of a non-resident individual. Basically, during this session, we are going to discuss about Sri Lankan tax law, which is applicable to individuals, that is non-resident individual. During my sessions, I am going to discuss about charging provisions in Inland Revenue Department applicable to Income Tax Act, sources of income, and calculation how your income tax liability is calculated. Then very interesting area, taxpayer registration. These days in Sri Lanka, there are so many discussions about this tax registration. This is there are so many recent changes in 2024 budget as well. So during my session, I am going to discuss in detail who is the responsible for registration or obtain TIN number, and what are the post-registration compliance. Once you register, there are so many regulations you need to comply. Otherwise, it will be affect to so many penalties, charges, interest. So during my session, I'm going to discuss about this post-registration compliance. Okay. Today, I'm going to discuss about mainly income tax, which is collected by Inland Revenue Department of Sri Lanka. As you aware, there are so many revenue collecting agencies on behalf of government, not only Inland Revenue Department, Sri Lanka Custom Excise Department. In addition to that, Provincial Revenue Department. Likewise, there are so many revenue collecting agencies which are collecting income taxes on behalf of the government. During my session, I am discussing about income tax, which is collected by the Inland Revenue Department. So first, I will let me explain about the legal background of income tax law in Sri Lanka. Currently applicable income tax law is Inland Revenue Act number 24 of 2017. This act was implemented in 1st April 2018. Subsequently, there are few amendments. You can see the amendment act. There are 4 amendment acts which was amended the original act, which is 24 of 2017. This is legal background of income tax law in Sri Lanka. So first I'll explain how income tax is charged. I referred it as a charging provision in Inland Revenue Act section number 2. according to the Act, income tax is payable by a person on his taxable income or final withholding payment. So if you have a taxable income, you need to pay income tax to the Inland Revenue Department. Or if you receive any final withholding payments, then you need to pay income tax. Final withholding payment mean a payment. For example, let's say you have invested in Sri Lanka in a share market, then you receive a dividend. The dividend paying company will deduct 15% withholding tax. Then you need to pay that withholding tax you are getting after deducting that 15% withholding tax. Accordingly, income tax shall be payable for each year of assessment by a person on his taxable income or final withholding payment. In my next slides, I will explain what is taxable income, how it calculated. Then you can decide whether you are liable for pay income tax in Sri Lanka or not. In previous slide, I referred to a year of assessment. Year of assessment mean you know that 12 months period, which is started from April of any year and ending the 31st day of March in immediately succeeding year. For example, 1st of April 2022 to 31st March 2023 is a 1 year of assessment. Currently, we are in November. This is year of assessment 23-24. Accordingly, your tax liability should be calculated for a period of 12 months. I think you can now you can clear what is year of assessment, how you decide your what is the period of tax liability. Then there is a call person and entity. According to a charging provision, income tax should be paid by a person. Person include individual as well as entities. That means every individual who are having taxable income need to pay income tax. That definition covers the individual as well. This is most important area, resident rule. I think most of you are out of Sri Lanka. According to Inland Revenue Act, Section 69, resident principle is a very important part because some of tax law is segregated for resident as well as non-resident. That resident and non-resident depend on the certain criteria. These are the criteria for individual considered as a resident for year of assessment if such individual reside in Sri Lanka or is present in Sri Lanka for a period in 183 days or more in any 12 months period which is commence or end during that year of assessment. Now you can decide whether you are resident or non-resident according to income tax law in Sri Lanka. If you are present in Sri Lanka more than 183 days, then you are a resident individual according to income tax law. If you are not 183 days, then you are a non-resident individual according to income tax law. I think now you have idea about what is the resident and the non-resident principle. Okay, then we will see what are the income sources. There are 4 income sources according to Inland Revenue Act. One is employment income, other one is business income, investment income, and other income. Employment income, you know, if you have any employment in Sri Lanka, then you are getting the employment income. If you are not doing any employment in Sri Lanka, then you don't have any employment income. Same as business income. If you are doing any business in Sri Lanka, then you have a business income. If you have any investment made in Sri Lanka, like investment in a bank, like bank deposit or share investment then you are getting an investment income. And any income which is not fall under any of the above three categories fall into other income. Those are the main income sources according to Inland Revenue Act. Okay, this is important for you. That is income tax liability of a non-resident individual. An individual being a non-resident is chargeable with income tax only on the income arising or derived from a source in Sri Lanka. If you are a non-resident, you need to pay income tax only on income derived a source in Sri Lanka. If you don't have any source in Sri Lanka, you no need to worry about paying taxes in Sri Lanka. If you have any income arising in Sri Lankan source, then you need to pay taxes. Accordingly, a non-resident person's liability to Sri Lankan tax is limited to the income earned from a source in Sri Lanka. I have mentioned few sources. One is income from employment, derived in respect of an employment in Sri Lanka, income from business, profit arising from a business conduct in Sri Lanka, income from investment in Sri Lanka. I think most of you might have few investment in Sri Lanka, like deposit in LKR account, or you may have some rent income, you may have some investment in share market. Then if you get in any income during the any year of assessment, you need to pay income tax. Method of accounting, this is discussing in section 21. Employment income and investment income, you need to pay tax on cash basis. Cash basis mean for any year of assessment, you need to pay tax for the income received during that period. If you didn't receive any income for a certain year of assessment, you no need to pay income tax. Accordingly, employment and income, investment income are taxed on cash basis. Other than employment and investment income, business income, you need to pay tax on accrual basis according to income tax law. That is called method of accounting. In this slide, I have mentioned how you assess your income. Let's see, employment income according to tax law. There are some excluded item. If you receive any employment income in Sri Lanka, there are some excluded item according to section 5 and 3. Then you can arrive to call assessable income. Same as business income. Let's say you are doing any business in Sri Lanka, then there is a revenue. You can deduct certain allowable expenses and previous year losses. Then you arrive to assessable income from business. Same as investment income. During the any year of assessment, let's say you are getting some investment income. You can deduct certain expenses according to section 10 and 19, and there are some excluded items according to section 7 and 3. You can deduct those allowable expenses and excluded items. Then you arrive to assessable income from investment. So altogether, those assessable income we call total assessable income for any given year of assessment. So this is called assessable income. But as I explained in my previous slide, I told you income tax should be paid on payable on taxable income. Now we see how we calculate taxable income. You know your assessable income, then there are some certain deduction called qualifying payments and relief. Once you deduct those qualifying payment and relief, you can arrive to your taxable income. So there are few qualifying payment and relief. Now you can see those qualifying payment. Let's say you sometimes you may do some donation in Sri Lanka. For example, if you do some approved charitable institution, donation to approved charitable institution in money form, you can deduct those donation from your income tax liability. But there is a maximum limit of 75,000 or 1/3 of your taxable income. If you do any donation to government in money or otherwise mean, let's say you do some donation to government hospital in goods, then that donation can deduct 100% from your assessable income. That's why I mentioned government or specified institution in money or otherwise, those donations are 100% deductible when calculate your taxable income. In this slide, these are the, sorry, here, now I am explaining how you arrive to your taxable income. First, you calculated your assessable income, then you can deduct qualifying payment as well as relief. See, according to Inland Revenue Act, year of assessment 22-23, there are certain relief you can deduct from your assessable income. One is personal relief. Personal relief, this first and second period, you know, I think you have some idea about 22-23 year. There are so many tax changes, tax rate changes, which was imposed after IMF IMF loan. There are tax changes in personal taxation as well as company taxation. Government changed personal income tax rate with effective from 1st January 2023. Then 22-23 year of assessment, we should break to 2 periods. First period and second period. According to previous tax law, there are 3 million tax relief for any year of assessment. But according to new rules and regulation, there are only 1.2 million personal relief for individuals. That's why I have break to first and second period accordingly. First period include only 9 months, second period include only 3 months. That's why I put 2.25 million for first period as personal relief. Second period only 300,000 out of that 1.2 million. And there are some expenditure relief, but unfortunately that expenditure relief is not applicable for a non-resident individual, but that expenditure relief has removed with effect from 1st January. There is no such a expenditure relief with effect from 1st January. And there is another relief called rent relief. Let's say you have property in Sri Lanka, you have rented out that property, then there is 25% rent relief from your gross rent. You can deduct that 25% rent relief from your gross rent. After deducting that rent relief, that net rent income is chargeable for income tax. And there is another relief called solar panel. If you have any investment in solar panel during the year of assessment, maximum 600,000 is deductible as a relief. Those are the relief you can deduct when calculating your tax liability. Now you can see the how your taxable income is calculated. Okay. Once you arrive to your taxable income, then you need to apply applicable tax rates on taxable income. Then you arrive to your gross tax liability. From that gross tax liability, there are some tax credit called withholding tax and self-assessment payment. Then you can arrive to your balance tax payable for any given year of assessment. This is how you calculate your income tax payable amount to Inland Revenue Department. So this is the applicable income tax rate for both resident as well as non-resident individual for year of assessment 22-23. For, as I explained previous slide, we segregate year of assessment for 2 periods now. The first 9 months applicable tax rate is 6%. First taxable income of 2.25 million, you need to pay income tax on 6%. Next 2.25 million, tax at 12%. If there is any balance taxable income, then you need to pay tax on at 18% for the first 9 months. For second 3 months period, this is the tax rate starting from 6% to 36%. First 125,000, 6%, next 125,000, 12%. Likewise, it goes up to 36%. It's not a small tax amount. You need to pay up to 36%. For 23-24 year of assessment, this is applicable income tax rate for considering entire year of assessment, both resident as well as non-resident individuals. Taxable income, first 500,000, 6%, next 500,000, 12%. Accordingly, it goes up to 36%. I think you have so many concerns. I will explain in end of the session.
Yes, Indika, I think we can take the questions at the end of the session and we can continue.
Okay. Yeah. Slides are not moving. Any issue? Hold on. Okay. Okay. Apart from the previous income tax rate, let's say you have any gain on realization of investment asset. Normally we call that as a capital gain. Let's say you have a property in Sri Lanka and you dispose that and you are getting a capital gain, you need to pay tax at a rate of 10% on that capital gain. If there is any betting, gambling or any liquor tobacco business, the tax rate is 40%. So this is the how income tax rates applicable for resident as well as non-resident individuals for the year of assessment 22-23. Okay. I will explain in detail about the business income and investment income because most of you, I think you don't have any employment income in Sri Lanka, but you may have business income or investment income. So I will explain about the business income and investment income. According to section 6, a person income from a business for the year of assessment shall be person gain and profit from conducting the business for the year that include a trade, profession, vocation or isolated agreement with the business character, however short the duration of the agreement. Let's say if you are doing any consultancy service or any trading business, that income or gain from that business we call as a business income. So there are so many income types like service income, consideration received in respect of trading stock, gain from realization of capital asset which was used for the business purpose. Those are the main business income. So there are some items which are excluded when calculating business income, like exempt amount. There are certain exemption, and if you pay any final withholding payment on your business, then those kind of income you can exclude when calculating business income. So when it comes to investment income, there are so many investment in Sri Lanka like dividend, interest, discount charges, annuity, natural resource payment, or rent, royalty. Those are the main investment income you are getting in arise or derive in Sri Lanka. In addition to that, gain from realization of investment asset or any gift received in respect of investment, winning from lotteries, all those categories come in under investment income. So you need to pay income tax by excluding, exempt, or final withholding payment. Now I will explain method of payment. As you aware, there are some withholding tax provision imposed by the Inland Revenue Department. According to Section 82, Inland Revenue Department has introduced so many withholding tax provision on certain payments. Like let's say you have made any deposit in Sri Lankan bank in LKR, then you receive interest after deducting 5% withholding payment. But you remit what you earn outside Sri Lanka to a Sri Lankan NRFC or RFC bank, that interest income exempt from income tax. Nothing to worry, those interest income are exempt, but you have, if you made any LKR investment in a bank, that interest income is liable for tax, and also 5% withholding tax will be charged by the relevant bank. This I have mentioned the percentage. Interest 5%. Rent payment, but it is only applicable to resident individual. Withholding tax percentage is 10%. Rent payment to non-resident. Let's say your property, there is a property you have rented out in Sri Lanka. You will get in after deducting 14% withholding tax. Dividend you will receive after deducting 15% withholding tax. This is withholding tax rate applicable to each source of income. Okay, then once you register for income tax, there are so many liabilities. One is very important compliance requirement is filing your income tax return. I will explain in detail if there is any non-compliance, what are the consequences. But here I will mention you need to file your income tax return on or before 30th November. So these days, all of you are aware income tax return filing deadline is falling into next week, 30th November. According to the law, as said today, you need to finalize your tax liability and you need to file your income tax return on or before 30th November. According to tax law, your computation need to be calculated, as I mentioned, for individuals for 2 periods, first 9 months as well as second 3 months. For others like companies, their taxable period is segregated as 6 months and first 6 months and second 6 months. Employment and investment and other income, as I explained, it is calculated for tax purpose on cash basis, and business income, it is calculated on accrual basis. For the segregation of income for the both period, you can apply pro rata basis, like for individual 75-25% rule. For the business, they can apply 50% rule, because someone don't have proper accounting records. then they can apply this pro rata basis when segregating their income for the 2 periods. Okay, now I will explain taxpayer registration. I think according to income tax law, taxpayer registration is a mandatory if you have a taxable income for any year of assessment. According to Inland Revenue Act section 102, every person liable to furnish a return of income for a year of assessment and who have not already registered shall register with IRD not later than 30 days after the end of the basis period of the year. Let's say you have a taxable income. Now you know what is so whether you have taxable income or not. If you have a taxable income, then you need to register for income tax. You need to get a TIN number. This is section 1 of 102, subsection 1. According to subsection 1, if you have any taxable income, any year of assessment, you need to open a tax file. According to subsection 3, the minister with the consent of CGIR may specify additional classes of person required to register under this section. If you aware, in last June, Sri Lankan government has introduced 14 categories that include basically professionals. Here, they introduced 14 categories. These 14 categories mandatory registration for income tax. I will explain one by one. Doctors, chartered accountants, members of certified management accountant in Sri Lanka, members of Institute of Engineers, members of Association of Professional Bankers, members of Sri Lankan Institute of Architects, members of Quantity Survey, attorney at law, the person who registered their business with divisional secretary in Sri Lanka, a person who have vehicle registered in Sri Lanka except three-wheel motorbicycle or hand tractors, the person who have purchased or acquired by virtue decide transfer of any immovable property, employees whose monthly contribution for both employee and employer to any provident fund more than 20,000, any individual who obtain approval for building plan from a local authority, or any other individual who receive payment of 100,000 per month or 1.2 million for 12 months period. These individuals getting a TIN number is mandatory effective from 1st June 2023. If you don't have a tax file right now, if you fall under any of the mentioned categories, you need to open tax file very soon. Otherwise, government will go for a forced registration. There are some people these days getting forced registration TIN certificate. Here, some of you, I think, already received this letter from Inland Revenue Department. Let's say, according to income tax law, I will go back to the previous slide. According to section 102, if you have taxable income, definitely you need to open a tax file. No, if you don't have tax file, you need to open a you need to get a TIN number as soon as possible. If you don't have fall under any section subsection 1 of 102, if you fall under any of the 14 categories, you need to open your tax file. Okay. Then recent budget proposal, they have introduced another amendment to the Inland Revenue Act section 102. According to the proposal, it says a mandatory requirement will be established for the submission of a copy of taxpayer registration certificate. Let's say you are going to open a current account in Sri Lanka in a bank, then you need to present your TIN certificate. Without giving your TIN certificate, you can't open a tax filing, you can't open a bank account in Sri Lanka. Or let's say you are going to approve your house plan or building plan. Definitely you need to present your TIN certificate to the local authorities. Without giving your TIN certificate, you can't get approval for your building plan. Same, if you going to register your motor vehicle or if you going to renew your revenue license, you need to present your TIN certificate to obtain that revenue license or vehicle registration. Then let's say you are going to buy a land in Sri Lanka. Before that, you need to obtain a TIN certificate. So now you can understand what are the registration requirement which is applicable in Sri Lankan tax law. As I said, this is forced registration letter received from Inland Revenue Department. Sometime if you check your email, based on the information available with the Inland Revenue Department, now these days they are extracting income sources from various sources. After getting those income sources, they think that you have adequate income, you have taxable income, then they go in for a tax registration and they send this letter saying you have identified as a tax registered person. We have opened your tax file and they have mentioned your tax number as well. If you have already received or if you have already received this letter, you don't want to open your tax file again because now you have already registered person according to tax law. Now I'll explain how you register for income tax purpose. As I said, first you need to obtain TIN registration. Then you need to apply tax type registration. As I said in my first slide, there are so many taxes in Sri Lanka. No? One is income tax, value added tax, SSCL, stamp duty. There are so many tax types, but all of those tax types are not applicable to each of you. Okay, then most of you are applicable income tax. Then after getting income tax registration, then you need to apply for tax type registration. If you are liable only for income tax, you need to register only for income tax. Let's say you are doing any income, any business in Sri Lanka and you are getting more than 80 million VAT liable revenue, then you need to register value added tax as well. In addition to that, let's say if you are getting any revenue for any year of assessment more than 120 million, then you need to register for social security contribution levy as well. Likewise, there are so many tax type. You can decide what kind of tax type which is applicable to you. So most of you are applicable only income tax. Then you need to get TIN number. After that, you need to apply for income tax registration. Now, I think you are thinking about how I get in TIN number, how I apply for tax type registration. As you are aware, Inland Revenue Department has provided online facility for tax registration purpose. That system called REMIS. I will show you the path. I will share the Inland Revenue site. Then you can see the Inland Revenue site, ird.lk. You can go to the e-services. Then there is separate tab called access to e-service. Here, there is separate field called click on taxpayer registration. Once you click here, then system direct to a separate form. Then the system asks about registration type. You need to select individual local. Then there are some information fields you need to fill. Fields with the star mark, those are the mandatory field. You need to fill all those fields. In here, you need to mention your income sources. If you don't have business income, you no need to click here. If you don't have any employment, you no need to tick in employment on employment income. Most of you have a investment income, then you need to tick in on investment income, and you need to fill other fields. Once you fill, there are some documents you need to upload. Your NIC copy and your billing proof. So those are the main supporting documents you need to submit for taxpayer registration. Once you upload all those documents, then you need to go to the next and submit your document. A very easy process for applying TIN certificate. Once you submit the application, within 2-3 days, you will receive an email with your TIN certificate. So same thing I have mentioned in the slide as well. You can go through. I will share the slides. This is the path how you apply for your TIN certificate. This is registration link. You can click on this link and you can direct to the IRD portal. Here I have mentioned another slide called update profile detail. Sometimes without, as I said previously, Inland Revenue Department already created a TIN number for you according to the information available with them. Then you need to update your profile. Let's say your email address, your billing address. So you need to update your profile. That's what I have mentioned here. Profile update is very important. Otherwise, all Inland Revenue correspondence, documents, payment slips will direct to wrong address. So keep in mind to update your profile. So next we will move to post-registration compliance, very important. Now you are thinking, if I have not registered for tax, what will happen? One requirement is, once you open a tax file, one requirement is you need to submit tax return called statement of estimated tax payable. The deadline is 15th August. Let's say year of assessment 22-23, you need to submit your SCT form. We call it as a SCT form. SCT form you need to submit on or before 15th August. Let's say if you not submit that SCT form, what will happen? I have mentioned penal provision here. A person who failed to submit the SCT as instructed by the Commissioner General of Inland Revenue may subject to pay a penalty up to 1 million rupee under Section 185 of the IR Act. Then there is a penalty will impose if you not submission your SCT form, statement of estimated tax payable. That is one requirement after getting your TIN certificate. Next one is pay tax on time. According to tax law, your tax liability, exact tax amount you can calculate after end of year of assessment. No, before that you don't know your exact amount. But according to tax law, you need to estimate your tax liability and you need to pay a estimated tax payment on quarterly basis. This is the due date. First installment due on 15th August. I have mentioned year of assessment 23-24. First installment of 23-24 fall due on 15th August. Second installment 15th November. Third installment 15th February. Fourth installment 15th May. After end of year of assessment, you know your exact tax liability. Then you calculated your exact tax liability, and if there is any balance tax payable, you need to pay that balance tax on or before 30th September 2024. Now you can apply same scenario to previous year of assessment 22-23. As of today, if there is any taxable income, already you have to pay your tax liability because due date was 30th September 2023. That is for 22-23 year of assessment. Here I mentioned due dates for year of assessment 23-24. You can understand that. Then I have mentioned the penal provision for non-payment or late payment. A person who failed to pay all or part of an installment required under the Act within 14 days of the due date for the installment shall be liable to penal equal to 10% of the amount of tax due but not paid. You need to pay 10% penalty for the late payment. Not only penalty, there is an interest as well. In the event of an installment or part thereof not paid on due date, 1.5% interest per month or part of a month shall be charged on such default installment or part of installment. Keep in mind, if you didn't pay your installment on time, then you need to pay penalty as well as interest. Next, they have imposed a fine and imprisonment. A person who willfully evades making installment payment shall be liable on conviction to a fine up to 10 million rupees or to imprisonment for a term up to 2 years or to both such fine and imprisonment under the section 183. So, according to law, there are so many penal provisions if you are non-compliance with Inland Revenue law. Now I am explaining post-registration compliance. One is submission of SET. Second one is payment of tax. Third one is submit the tax return. As I said earlier, all the taxpayers need to submit their income tax return on or before 30th November. For example, 22-23 year of assessment, your tax return need to be filed on or before this end of this month. What is the non-compliance penal provision applicable for non-compliance? Failure to file a return, an individual is liable to a fine not exceeding 1 million rupees or to imprisonment for a term not exceeding 1 year or both such fine and imprisonment. So both will be applicable according to CGIR decision. Not only a penalty, not only a 1 million fine, there is a penalty for late filing return is equal to greater of 5% of the amount of tax owing plus a further 1% of amount of tax owing for each month or part of month during which is the failure to file continues. So you need to pay 5% plus 1% for each month. plus 50% plus a further 10,000, 50,000 plus another 10,000 for each month or part of month after November 30th. So in here, there are so many assessment getting from Inland Revenue Department mentioning you need to pay this penalty. If you are non-compliance, as I mentioned, those letters will be definitely issuing according to Inland Revenue. We can compare with the previous Inland Revenue behavior. Totally, they have different. Closely monitor non-compliance things. So better comply with the Inland Revenue regulation. Basically, compliance matters like filing tax return and SCT returns. Basically, sometimes you don't have any income in Sri Lanka, but you need to open a tax file, as I mentioned in previous slide. So only matter of filing your tax return, then there is no any penalty or any interest you no need to pay to the Inland Revenue Department if you comply with those requirements. So those are the main areas I want to highlight. I think you may have so many questions to be asked. You can ask now. If there's anything you can resolve during the session, you may ask through my WhatsApp number I have mentioned here. So we'll discuss your questions.
Thank you, Indika. That is a very informative session. All of us who are living outside Sri Lanka, were really concerned about the recent developments on the registration, and most of our members have got emails from IRD on the forced registration. So we had a lot of questions, and I hope that this session answered most of the questions we had. To start with the Q&A, Indika, I think we almost reached the 1 hour mark, but we will take 10-15 minutes more and try to address the important questions, if you're okay with it. Yeah. Indika, you showed that taxpayer registration page on IRD's website.
Yeah.
Is there a separate option for non-residents? Because I'm not able to see that. It's just a generic registration. Does it mention?
Yeah. No, there's no separate tab or separate field. You have to you need to click on individual local.
Okay. Okay. Also, in the most of the people are asking, this particular question now, because all the CA members are now compelled or supposed to register with IRD and have a TIN number. Having a TIN number is sufficient. Is it sufficient if you do not have any taxable income in Sri Lanka, or regardless of your taxable income, you still have to submit a tax return annually?
Yes, you have. If you have a TIN number, definitely you need to file your tax return. We call it as a nil return. You need to submit nil return. Yeah.
So that is mandatory. There is no choice on that. Okay.
No choice.
So we'll take some more questions from our participants. There's one question regarding investment properties in Sri Lanka. Let's say the husband is working abroad and he's a non-resident, and the spouse is in Sri Lanka and she's a resident, and they jointly own a property or house or an apartment, and there is a rent income from that. So how we will treat that particular rent income for tax purpose of the non-resident?
So as I said, it is a coming under investment income. No. So in your tax computation, gross rent you need to consider for your tax computation, but you can deduct 25% rent relief. After deducting that 25% rent relief, you need to add that net rent income to your tax computation. You need to pay tax on that.
Okay, so because now both the husband and wife are taxed, how the allocation of that particular income can happen now? We can estimate it, which portion of the income belongs to the non-resident.
Yeah. Anyway, if you consider for the husband or wife, entire rent income is taxable. No, you
Yes.
can proportionate that. No issue about that. But that rent income is chargeable with income tax for any person.
Okay, and we will go through the questions and see if there are any more relevant questions which were not answered during the session.
Okay.
So there is another member who is asking again on investment properties.
Yeah.
He's saying I'm not a resident and have investments made in acquiring lands and some flats in Sri Lanka, but those properties are not generating any income. So how to treat this? I think you already answered this question, but if you
Yeah.
want
If there is no income, you need to pay tax, but you need to declare those properties in your tax return. There is separate field called asset and liability statement in tax return. You need to declare those property detail in your tax return.
okay.
But
So
no, if there is no income, you no need to pay.
okay. And on the definition of resident or non-resident, one member is asking, as far as my understanding, if you have a permanent place in Sri Lanka, such as a house or which you own, then you are considered a resident regardless of whether you stayed in Sri Lanka for 183 days or not. What is your take on that, Indika?
Basically, even though you have a what do you call property, main house or something, according to law, if you not reside in Sri Lanka during that year of assessment 183 days, you need to consider as a non-resident individual. That rule is not changed.
Yeah, so regardless of whether you own a house or not, if you are not in Sri Lanka for
It's not
100,
applicable.
yes,
Yeah,
it's not
it's
applicable.
not
Yeah.
applicable.
On interest income, one member is asking now, when you are receiving interest income from bank in Sri Lanka, withholding tax of 5% is already deducted.
Yeah.
So uh, after that deduction, are you still supposed to pay income tax on the remaining income if you are a non-resident?
Yes. It's like this. Your gross income, your gross interest income is liable for income tax. But that 5% withholding tax, you can claim withholding tax credit on your gross income tax liability.
It's like the
Let
usual.
Yeah. Let's say your interest income is 100 rupee. You are getting 95 rupee, but you take 100 rupee for the tax computation. Then you need to arrive for the gross income tax liability. From that, you can deduct 5% withholding tax as a tax credit. But keep in mind, you need to get the withholding tax certificate from relevant bank.
In summary, now, regardless of whether you are a resident or non-resident, the rules applicable for the income generated in Sri Lanka and how
Yeah.
it is taxed is same,
Yes.
whether you are a resident or non-resident.
Yes.
Okay. So that is one of the doubts most of our members had.
Yeah.
And there's one more question regarding investments in land, which can be developed into plantation businesses. So in such cases, do we have any tax credits or concessions? Now, if you own a land and then you develop it as an agricultural land, and then you start generating income from that. So do you have any tax credits or concessions you can take from that?
There are some concession in previous law, but they have, according to new recent amendment, they have revoked all the exemptions. You
Okay,
need to, if there is any income derived from that property, then it is liable for tax, income tax.
One more question, Indika. I think with this question we can wind up the session.
Okay.
Now, let's say a chartered accountant, a non-resident, now is opening a file with tax authorities in Sri Lanka, and he's supposed to declare his income and pay tax on that. Does he supposed to declare his income earned outside Sri Lanka, even though it is not taxed in the tax return? Should you disclose it?
No. If you have sent foreign income through a Sri Lankan bank, there is separate field you need to mention your income. Other than that, no need to mention. There is no field in tax return. But there are a separate field to mention the exempt income. But you need to fill that field. Let's say your foreign earnings you remit to Sri Lankan bank. You earn interest income on that. That interest you need to declare in under exempt income.
Okay, so if you are transferring any portion of your income through any Sri Lankan bank to Sri Lanka, then you are supposed to declare it.
Supposed to declare only the interest portion under
Okay.
exempt income.
Okay.
No need to declare the remitted amount.
Okay.
Only interest income.
Understood. So there is one more I think we can take. Non-residents are liable to 14% of withholding tax on rent income in Sri Lanka if the rent income exceeds 100,000 rupees of commercial properties. However, if payments are credited to the local bank account in Sri Lanka, is it the same rate applied, or we can ask them to apply 10%?
No, rent income of a non-resident individual, then 14% is the applicable withholding tax rate.
Okay, so there's
Not
no
10%.
on that.
No.
Thank you very much, Indika. It's a very fruitful session, and most of our members were looking forward to it. And this is one of the sessions with highest attendance. I have to say, I think this is one of the sessions we had in the recent time with the most number of participants, and that shows a lot of interest on this subject, and it is very useful. And thank you, Indika, for putting a lot of effort and summarizing it. It showed in the presentation. It's very concise and very clear, and within 1 hour time, you were able to clarify a lot of things for us. If required and if there is need, definitely we will get you on board for a tax-related session or any other session in future. Thank you, Indika. Thank you very much. I'd also like to thank all the members and the members of other professional accounting bodies participated during today's session. Thank you all. And we have